IRS, our favorite branch of the government. This video is for two types of people, in my opinion: students and wise guys or wise people. You either want to learn the rules of the IRS or you're trying to look for loopholes. Today, I'm going over additional filing requirements. These are for people with special cases who need to file tax returns at the end of the year. I'm going to go over the list of conditions that individual taxpayer needs to meet to file a return. Some of these are because you got a couple of boxes checked on your W-2. Most of the exact figures that I'm be talking about or displaying about this subject are going to change year to year, so you have to be aware of that. So do your homework and get the latest figures. The first and easiest to understand is the net earnings from self-employment. This is for taxpayers who have small businesses, most likely a sole proprietor or a partnership. And if you make at least $400 of net earnings, you will need to file a return. The IRS is looking for your Social Security and Medicaid taxes. This is going to be the theme for most of the upcoming conditions. If you get any types of wages, even from churches or qualifying church control organizations, that is exempt from employer Social Security and Medicare taxes. If you do any type of work for any type of church and they pay you more than $108.28, is that exact? As of the year, guess what? You are on the hook to do a file return and to be paying the Social Security and Medicare. The following condition is for people who file jointly. In this case, for the spouses, they receive any FHA or Archer MSA or Medicare Advancement MSA distributions. This is for taxpayers who receive 1099 SA form on the mail and they have any type of health savings account. If your employer contributes any towards your health savings account and it exceeds the annual limit, the excess may become taxable income to you as an employee. This goes for advance payments for premium tax credits from enrollments of coverage through the health insurance marketplace. This includes your spouse or any types of dependents, so it's something that has to be on the lookout. Second, taxpayer who owns special taxes or must recapture certain credits. It's just a fancy way of saying if you're pretty much rich, you need to pay more taxes. We will start with our favorite AMT, alternative minimum tax. Yay! AMT is a whole monster of itself, which separates tax systems. You will need to calculate your tax liabilities twice, first under the ordinary income tax rules, then under the AMT, and pay the highest of the two. I know it's kind of messed up, but I understand why they doing this type of analysis on your taxes. If you guys want a video on the history of AMTs, it's something that is not really exciting, but I can go over with you guys. The household employment tax. This is for people who have any maids or people who clean their house or landscaping. You will have to file Schedule H. This is the only reason that you're filing. Additional tax on qualifying retirement plans such as IRAs, individual retirement arrangements. You will need to file a 5329 form if these are the only reason that you need to file. It's pretty much easy peasy on this kind of condition. But also we have Social Security and Medicare tax on tips not reported to the employer or wages is received from an employer who did not withhold any taxes. Pretty much Uncle Sam is looking for those his cheddar of the piece. This is going for a restaurant, mostly for the restaurant industry and getting paid under the table. Some jobs that do that. This also goes for tips reported to employers who are on a group term insurance and additional taxes on health savings accounts. To top it off, this includes RRTA, the Railroad Retirement Tax Act. Another condition would be recapture taxes. I can do like 5 videos just on recapture taxes. The basic understanding is recapture taxes is paying back the federal government for benefits of the lowest interest mortgage loan. That's the basic. That's just a basic example. I'm not gonna go over other depreciation recapture taxes. This is for people who sell their houses or assets. They depreciate on their in the return, and then they either sell it and then they have to pay whatever the depreciation on that asset is. This also applies for people who inherit assets. It's like a capital gain type of tax. And finally, just a small tip: even if the taxpayer doesn't have to file a return, the taxpayer should file one to get a return or any federal income tax withheld. Or if the taxpayer made estimated tax payments for the year or had overpayment for last year's apply to this year estimate tax. A taxpayer also should file if eligible for any of the following credits, and you better get your cheddar on this one. The following are the examples of credits: any earned income credits, additional child tax credit, the American Opportunity Credit, the refundable portion only. Also, any premium tax credit. That's pretty much all the credits I can think of right now, and you should definitely be doing a return if you can get that money on your pocket. And anyways, thank you guys for watching, and always remember to keep it simple.